Good morning. I first want to explain the concepts and the reasons why we do a bank reconciliation before I do an actual question. So what you must remember that in my books, I will have a bank account. According to me, the bank is an asset to me. So the bank will increase on the debit side to increase the asset and decrease on the credit side. So I will record entries in the cash receipts journal when I receive money, and I will record entries in the cash payments journal when I pay money and it decreases my asset. Okay, so the money that or entries that we will record on the debit side would be deposits because it increases the money in the bank, EFTs that we receive from clients, so they pay their account or purchases with the EFT, debit card payments by the client, so the money is paid from their bank account directly into our bank account, credit card payments, the bank will pay the money directly into our bank account on the same day. The payments will be EFTs that we issued, so you must be very careful to read whether it's EFTs that was received, that was paid into your bank account, that is from clients, or if we issue EFTs to creditors or to pay expenses. And the business can also do debit card payments so that the business will pay for expenses or creditors and the bank will transfer the money immediately to the person who is supposed to get the money. Okay, in the books of the bank, they see us as a liability because they have to give us this money back again. So that means if it's a liability, it will increase on the credit side and will decrease on the debit side. So all these entries that we completed here on the credit side, showing that the money goes out of our bank account, will go in the books of the bank on the debit side, and all the entries that we record on the debit side, increasing the money in the bank, will go in their books on the credit side. So the books of the bank will always be the opposite of what we do in our books in the business. Okay, electronic fund transfers means that we pay money with computer and we transfer money from one account to another bank account. If the client uses the EFT, it means that we receive money and that therefore we will record it in the cash receipts journal or the debit side of the bank. If the business uses an EFT, we are paying money and it will be recorded on the credit side of the bank or cash payments journal. Okay, debit cards means that the bank is linked to the debit card, your bank account. So whenever you use this debit card, the bank will immediately transfer the money from your bank account to the account of the receiver of the money. Okay, if the client uses a debit card, it means that the business will receive money and cash will be paid into the bank account of the business, so we will record it in the cash receipts journal. If the business uses a debit card, it means that we pay out money for expenses or creditors, so it will be recorded in the cash payments journal. Credit cards. There's a difference between the debit cards and credit cards. The debit card is linked to your bank account. So whenever you use a debit card, the bank will transfer the money immediate to the recipient's bank account. A credit card you obtain from the credit department at the bank. So you actually owe the money to the bank and you will pay the money to the bank. If a client uses a credit card, it means that we receive that money on the same day. The bank will transfer the money to the bank account of the business on the same day, and therefore we will regard it as a cash transaction in the cash receipts journal. When the business uses a credit card, it is not a cash transaction. So it means you can't record it in your cash payments journal because no money is going out of your bank account. You will pay the bank at the end of the month and then you will record it. The bank reconciliation is done to reconcile the books of the business with the books of the bank. So as we are doing a bank account in our books and we record all the deposits, that increases the amount in the bank on the debit side, and we record all the payments on the credit side. The bank will do the same. They will show deposits on the credit side because it increases the liability, the total amount that they must pay back to us, and they will record payments on the debit side. So if both of us did all the entries and there's no mistakes, it means that the balance in my books and the balance in the books of the bank should be the same. But that doesn't happen because there's always transactions that must still be recorded, or there is mistakes that must be corrected. Okay, so if we look at the difference between the journals and the bank statement, in my bank account, in my books, I will show direct deposits, so it's people putting money into my bank account. Interest on current account, now remember, if they say the interest is in the bank statement on the credit side, it will go on the debit side of our books. So this is a big important thing that you must read is this credit balance, because they catch you out every time with it. You think you must put that interest on the credit side. This interest is in the bank statement on the credit side, so it's an income for the business and will be recorded on the debit side. Debit card payments by clients, the money is transferred immediately to our bank account. Credit card payments by clients, the money is paid over by the bank on the same day. If a fixed deposit matures, so it means it was deposited for a year, for instance, and the fixed deposit expired, they will put the money back into my bank account. EFT payments that we made to the business, so it means someone else paid it into the name, a business account, so it means that this is money that we receive. If the business makes out EFTs, it means the business pays it, then it will go on the credit side. If we receive EFTs and the clients cancel it, it will be cancelled on the credit side. If we pay an EFT and we want to cancel it, then we will put it on the debit side. This cancellation of EFTs will not be asked in exam because this happens very seldom, but it is important to know that something like that can happen. Then things that we pay that will reduce the amount in the bank can be, for instance, interest on debit balance means it's interest that we pay on an overdraft. Bank charges, we add all the expenses that we pay to the bank except interest, and we call all of them bank charges. A stop order is signed at the bank instructing the bank to pay a specific amount to an insurance company, for instance, for expense. It will remain the same from month to month. A debit order we sign at, for instance, Telkom, and this will change from month to month. Any debit card payments that the business will make will take money out of the bank because the bank will transfer it immediately to the account of the recipient. Okay, transactions in the bank account that does not appear on the bank statement could, for instance, be an outstanding deposit that they still have to show. Now remember, in the deposits is in our books on the debit side, so in their books it will be on the credit side. EFTs that's outstanding is money that they still have to record that will be paid out, so therefore it will be on the debit side. If you look at the procedure, how to record and determine the entries that must be recorded when we do bank reconciliation, we will first of all look at the deposits in the bank column of the cash receipts with the deposits in the bank statement. And in their books, it will be on the credit side. Then any deposits that was not recorded will be recorded on the bank reconciliation because the bank must still do it. So this will go to the bank recon. Any EFT or debit card payments that we made, we will check in the bank column of the cash payments with the debit side of your bank statement. And if there are any items that's not ticked off in your cash payments journal, you will record it in the bank recon as outstanding payments. Any items that was not ticked off on your bank statement means that we still have to record it. So if it represents deposits, you will record it in your cash receipts journal. If there's any unmarked items in the bank statement that other people paid for us, it will go in the cash receipts journal. If we paid money to someone else, it will be recorded in the cash payments journal. So we made a payment and we didn't record it in time. So we will have to put that in the cash payments. After all these corrections were done and the omissions, we will take these entries to our bank account. So if there's any unmarked items in the cash receipts, we will have to show it in our bank statement or bank recon on the credit side. And any unmarked items in the cash payments journal will go in the bank recon on the debit side. When you do the reconciliation of the bank statement and you already had the bank reconciliation statement in the previous month, you will go and look and see, was there any deposits at the end of the previous month or EFTs or correction of errors that we indicated the bank still had to do. And then we check and we see, did they record these entries to ensure that all the entries were recorded. If we make mistakes, whether it's the bank or the business, it must be corrected. So the first thing that you have to determine is who made the mistake or where was this mistake made. Was it made in our books or was it made in the books of the bank? Then where the mistake was made, that is where it will be corrected. So if we made a mistake in the cash receipts or cash payments journal, we will correct it in the cash receipts or cash payments. If the bank made a mistake, it will be corrected on the bank statement. Then we have to determine, after we decided where was the mistake made, we must determine, was this mistake on the debit or the credit side? And then we determine, must we increase the amount on the debit side or must we decrease it on the credit side? So it's very important with the correction of entries to ensure that you do it very systematically, that you don't think it out incorrectly. So first determine where was the mistake made. Then you say, who made that mistake? Where must I correct it? Where the mistake was made, in that books you will correct it. And then if you must decide whether it was on the debit or credit side, and then you decide how to correct the mistake.